Hey guys, so in this video I'm going to be doing an in-depth stock analysis on ExxonMobil. The symbol for ExxonMobil is XOM. If you're new to this channel, I make videos on the stock market and investing, so if you're interested in that, consider subscribing, and let's get right into the video. If you don't know what ExxonMobil is, they are the largest integrated oil company in the world with a market cap around $400 billion. ExxonMobil has three business segments. These segments are upstream, downstream, and chemical. These three segments allow ExxonMobil to turn a profit even with low oil prices because downstream and chemical aren't reliant on the price of the oil. This makes them a far safer investment than just upstream producers like ConocoPhillips, but it also means there is less upside if oil returns to $60 or $70 a barrel. I will now look at the earnings from each of these segments in Q2 of 2017. So the upstream segment in Q2 2017 performed significantly better than in Q2 2016. In second quarter 2016, the upstream segment earned $294 million, and in Q2 2017, it earned almost $1.2 billion. This increase in earnings is mostly due to the fact that oil prices have increased significantly since second quarter 2016. ExxonMobil's downstream segment also had a great second quarter 2017 compared to second quarter 2016. In second quarter 2016, they earned $825 million compared to almost $1.4 billion in second quarter 2017. This is a great improvement in downstream as well. The one segment of ExxonMobil's business that did not perform as well in second quarter 2017 compared to second quarter 2016 was their chemical segment's earnings. In Q2 2016, they earned around $1.2 billion, versus in Q2 2017, they earned only around $1 billion. They attributed this due to increased turnaround activities, lower commodity margins, and lower sales. I don't see this as being a huge problem going forward, but it will definitely need to be something that you watch if you decide to invest in ExxonMobil. ExxonMobil has generated a significant amount of free cash flow so far this year. It has been enough to cover their shareholder distributions, which is their dividend, as well as their capex, and reduce their debt, as well as add slightly to the amount of cash that they have. The main takeaway from this slide is that ExxonMobil has $41.9 billion in debt, with $4 billion in cash, which means they have a net debt position of $37.9 billion. This is incredibly low, especially when compared to the other oil majors. ExxonMobil has less debt than Chevron, even though Exxon is just about twice the size of Chevron. ExxonMobil's very strong balance sheet is one of the main reasons that they are attractive to me. It will allow them to weather lower for longer oil prices, as well as it will allow them to take on new debt if they see opportunities that justify adding debt. This shows ExxonMobil's market cap compared to the other large oil companies, as well as the leverage compared to the other large oil companies, and the credit ratings of ExxonMobil and all of the other large oil companies. As you can see, ExxonMobil has the lowest leverage, the highest market cap, and the highest credit rating of any of the large integrated oil companies. In terms of valuation, as you can see here, ExxonMobil's price has been down over the last 5 years, and they currently have a price-to-earnings ratio around 28. I don't like using price-to-earnings ratio to value ExxonMobil right now because we are seeing oil prices lower than we have in quite some time, which means that their earnings are going to be significantly depressed. As you can see, ExxonMobil is currently yielding around 4%. This is significantly higher than they've been yielding in the past. Since I can't use ExxonMobil's price to earnings to get a feel for their valuation, I will use a chart of their historical dividend yield. As you can see, their current yield is right around 4%, and their average yield is around 2.55%. This chart does go back all the way to 1995. I'm using dividend yield because, as you know, as the stock price goes up or down, the yield on cost changes on the shares you purchase. But since I can't use price to earnings, I can use yield to get a feel for where ExxonMobil's price is relative to where it has been in the past, and what ExxonMobil's price would be if we returned to a more normal environment. So if ExxonMobil were to return to slightly above their historical average yield of 2.55% and start yielding 2.75%, that would mean that they were trading at $112 per share, which is a 42.73% upside from the current share price. ExxonMobil also has a great history of raising their dividend and has raised their dividend every single year for 34 years. This shows that the company is stable through all oil prices and that they continue to deliver strong shareholder value. I will now look at some of the areas that I think ExxonMobil can grow, which will help them generate more earnings in the future. The first area of growth for ExxonMobil is their discovery in Guyana. They believe that it could contain 2.3 to 2.8 billion barrels of recoverable resources. This is quite a bit and would definitely help ExxonMobil generate more earnings in the future. ExxonMobil also has great Permian Basin resources. They currently have 16 rigs operating in the Permian Basin. This number will likely grow, meaning that they will be able to continually increase their production. They also have some strong assets in the Delaware Basin, which has very low development costs. These resources will be able to produce profitable oil for them in almost any oil pricing environment. This is very important for them to have. Another very important growth area for ExxonMobil is their Liza development. They currently think that their Phase 1 investment will be up and running in 2020, which is less than 5 years after their discovery in 2015. They think that it will be able to produce 120,000 barrels per day and will deliver them double-digit discounted cash flow return, even at under $40 per barrel for oil price. ExxonMobil is also looking at developing a Phase 2 of this project, which would likely deliver them even more low-cost oil. There is still not much info on Phase 2 of this project, but it will definitely be important to look into in the future because it could be a large growth area for ExxonMobil. ExxonMobil has also recently acquired another chemicals facility. Their chemical segment was the only one that did not grow from Q2 2016 to Q2 2017. I think that this new acquisition will definitely help to pick up their chemicals segment and allow it to continue growing in the future. The final growth area that I see for ExxonMobil is them expanding into the Mexico fuels market. This will likely be another way for them to sell more gas, and it will definitely help their earnings in the future if they are successful with their expansion. Despite Exxon having the strongest balance sheet of any oil company and the ability to generate strong free cash flow even at low oil prices, there are still some risks associated with this investment. The first risk is just a minor one that would only have an effect on the short-term earnings. So they have only used 37% of their guided CapEx in the first half of 2017, which means that if they were to use the remaining amount of guided CapEx in the second half of 2017, it could be a drain on their reported earnings, which could cause the stock price to suffer short-term decreases. However, I don't see this as being a problem long-term because, like I said, it will only affect the second half of 2017. Another risk that I see for ExxonMobil long-term is that they aren't working on very many renewable energy sources. Other oil companies are working on things like offshore wind farms, but ExxonMobil doesn't have any renewable energy sources other than the algae that they are working on that produces biofuel. I don't know if this will be a huge problem for them because I could always see ExxonMobil just purchasing a renewable energy company after this area of the market becomes more developed, which is what I'm hoping they'll do. However, if they decide to ignore renewable energy, it could be a problem for them as oil gets phased out. I don't see this being a problem for them anytime soon because demand for oil is still growing quickly, as well as the population is growing and India and China are quickly developing as nations. However, if you are investing in this company for the next 20 or 30 years, it will definitely be something that you need to watch to make sure that there isn't a big shift to renewables that Exxon misses out on. The final risk that I see for ExxonMobil is if oil prices remain low for a very long time. ExxonMobil is definitely a lot safer than other oil companies because of their downstream and chemical segments. However, lower oil prices could keep ExxonMobil's price at this currently depressed level for a very long time. If you see oil prices recovering very quickly, then you should probably be investing in an independent oil producer like ConocoPhillips, which just has upstream segments. But if you see oil prices remaining in the 50s and then slowly going back up, ExxonMobil is probably your best bet because they can remain profitable in the low oil price environment and then will also offer some decent upside if oil prices continue to go up, though their upside won't be quite as much as something like ConocoPhillips if oil prices were to return to $60 or $70 a barrel. In conclusion, I think that ExxonMobil is the strongest oil company right now. They have shown that they are able to generate strong cash flow even at low oil prices, and they have the strongest balance sheet of any oil company. I think that they have decent future growth prospects, and that a rise in oil prices will definitely benefit them. I don't think that a rise in oil prices will benefit them quite as much as it would benefit some independent oil producers, but I think the risk of owning ExxonMobil is significantly less than owning independent oil producers, and this makes ExxonMobil a better investment option than the upstream producers. What do you guys think about ExxonMobil's future, and what do you think about where oil prices are going? Leave a comment down below. Thank you for watching. If you enjoyed this video, leave a like down below and consider subscribing because I make stock market and investing videos quite frequently.